Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to give you a quick summary of the week. Obviously, we're gonna start taking a look of what was the main comments done during the week by the central bankers. We got certain words from Jerome Powell, the president of Federal Reserve. We got also certain comments done by Christine Lagarde, the president of Central Bank of Europe, the two biggest central banks in the world. And we have seen also certain numbers coming and speculations from like GG platform from Japan, talking about the imminent change on the monetary policies from Japan. Take in consideration, please, important reminder that US yen is one of the pairs that is doing a crazy movement and historical prices for the last 30 years. So that's another very important factor we need to take a look on the charts today. We have seen a new record on gold price. We have seen also the labor market data released, the labor report from United States published today, Friday. It was very interesting too. We got super good positive non-farm payrolls, but negative unemployment rate, which is rising from 3.7 expectation to 3.9 final results. What we need to do now is interpret all this information. Yes, please, quick reminder. Every single morning, I'm making a comment on this macroeconomical data, the key factors, main markets affected by this data, and adjustments done by the price on almost absolutely all assets. We're talking about fixed income, we're talking about commodities, we're talking about equity, obviously, we're talking about currencies, and we're talking about Bitcoin time to time too, to monitorize all kind of assets. So you got a quick report here every morning with the last 24 hours news, comments and reflections. I'm just giving to you my view, my feedback, and why I think some of this data it's really important, why I think some of this data is actually not important, or why could be underinterpreting or misinterpreting in terms of market, right? So I recommend it to you. Read, if you want to go into details, read this report every morning and you will see why. You also can follow our account on ATFX Connect at the platform X, because I'm sharing charts, reflection, comments, even TV interviews here. So every time I'm see something interesting, I just publish here. So if you want to get last minute information, you can also find in this profile all. And just to give you an example, this morning we published something really interesting, which it was the overpass of Euro stocks over SP 500 in terms of returns this year. So it means like European stocks, European equity are generating more returns even the SP 500. Now what is important and what is interesting here is if we take in consideration the European area is not growing at all, you got the growth rate on the screen right now and you can see that it's actually the growth rate of Europe is 0, even negative in certain periods, while the growth rate of the United States clearly much stronger than Europe. So my main question is, where is all of this growth coming from in the case of Europe? Who is buying the equities in Europe? If you can see that actually the main economy in Europe is Germany, and it's a clear contraction on the economy. Yes, we got certain positive factors like industrial production from Germany this week. We was positive, but in general terms, Germany has been giving super bad numbers in terms of macroeconomics, and clearly the last main factor, which is the growth rate, is negative in the case of Germany. So therefore, I insist, if European Union is in this critical condition right now, and even I was just mentioned this comment, despite the lack of growth rate in Europe and the absence of rate cut promises, because yes, Christine Lagarde only this week has been admitted that they could consider the interest rate cuts for the future based on data, but she also said they didn't discuss at the moment any interest rate cuts, and it's something that surprisingly is much tough, much harder, much hawkish than the position of Federal Reserve, because the Federal Reserve is openly talking about interest rate cuts. The president of the Federal Reserve, Jerome Powell, has been since December suggesting the idea of interest rate cuts. They even let the market speculate with this idea by expecting an interest rate cut for March, which is something that didn't happen. And now in March, we're talking about that maybe the interest rate cuts will come by July. Even early this week, I was mentioning in our reports one of the comments done by one analyst from, I believe it was JP Morgan, Goldman Sachs, someone else was saying, I keep my bet that we're gonna have, no, it was Cascaris, that's the one who was saying, he said, I bet early this year that we will see at least 2 interest rate cuts. He said, I keep my bet, or maybe just 1. So even they are mentioned, well, maybe it's not 2 interest rate cuts, maybe it's just 1 this year. But I just want to remind you that initially the market was discounting even 4 interest rate cuts from United States. And so far, none of one didn't have happened yet. So therefore, market is expecting interest rate cuts, and it's true that expectation, just the expectation, is making the market rise to a new records. This is SP 500 in the spot, and you can see that it's rising and rising and rising. Surprisingly, the last few hours since we published the unemployment rate, the last few hours the market has been dropping. This is interesting. Why? Because in my eyes, reading, let's take a look on the calendar. 3.9 over 3.7% unemployment rate expected. 3.9 means that employment rate is rising. And the main problem from Federal Reserve, it was the labor market. It has been mentioned or quoted many times by officials from the Federal Reserve. One of the reasons why they were saying maybe it's too early to cut interest rates because the labor market is too strong. So my point, it was for the last few days, the last few weeks actually, and I was mentioned that in the reports, only when we will see the labor market in the United States get weaker is when we could expect a real interest rate cut decision. Only then. I was giving to you more specific details about that point, about my argument, which it was mainly that if we take a look how the inflation is composed, and by the way, the inflation is completely flat. So don't let the people, don't let the authorities keep saying that the inflation is getting better, because it is not getting better. Since summer 2023, we are moving up and down, up and down, up and down. This is what they call stick inflation. Yes, inflation was dropping, but it was dropping until summer 2023. And since then, we have seen an inflation rising, we have seen inflation dropping, blah, 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 blah. At the moment, the last data we got it from January is 3.1% inflation in the United States. And that's exactly 0.1% above the level from June 2023. So therefore, no, inflation is not dropping since summer 2023. It's a stick inflation. And if one thing I was mentioning in the reports, if you decompose, you just actually extract the factors inside of this inflation to see what exactly, analyze which ones are causing most likely the inflation, what you will find is actually the services is the ones who are rising more the prices. And service is a sector that is composed mainly by high use of labor force. Therefore, it's highly related with the labor market. We are not talking about tech sector, we are not talking about industry, we are talking about services, which is mainly done by humans, not by machines, not by industry. So if the service is done by humans and not machines, only when unemployment rise and more people lost their job is when inflation gonna start to drop. And in other words, something I has been mentioned in the previous videos, this is the natural relation between Philip curve. In economy is defined Philip curve like the relation, it was done by Phillips in the 15s, is the relation between labor, unemployment rate and inflation. When inflation is rising, unemployment rate is actually super low. When inflation is dropping, unemployment rate starts to rise. That's the relation, and it makes sense because in theory, inflation is impulsed by salaries. So if the labor market in the employment rate is rising, salaries are dropping, and therefore inflation is getting adjusted because less people can afford go out there and spend the money in services and goods and so on. I think that makes sense from a macroeconomical perspective, analyzing that factor. That's what I learned and less in the economic books. Another thing is the jungle, which is the market, and not always the things make sense in the market, as you probably notice if you have been trading already for enough time. Now, in general terms, today Friday, we have seen now the SP 500 is mysteriously dropping. Euro dollar is dropping as well. Gold has been rising to a new record. I think we have been almost touching $2,200 per ounce. Oil has been dropping now during the day, but even now. So the surprise is coming from SP 500 and from gold dropping. Let me take a look on DAX. On dollar index. And yeah, it's just rising little bit because obviously it was dropping strongly after those numbers. Because if the labor market unemployment rate is rising from 3.7 expectation to 3.9, it means that the Federal Reserve finally got good arguments, good reasons to press the button and cut interest rates finally. And that's why I believe dollar was getting, you see, they broke the mainly support composed by the moving average, by the neckline, and it was just dropping. Somehow now it's resisting and reborn again. I think it's just a kind of reflex doing by the market, a kind of corrective wave from the impulsive wave, which is bearish wave, and I think this is not gonna change anything at all in long term. Yeah, more specifically, we can also take a look on we have seen SP 500, Nasdaq also, regardless this correction, both of them have been breaking. Look, Nasdaq has been breaking a new record, 18,000 points, 95. If I go to Europe markets, DAX 40, the German market has been again touching new records. We have seen 17,904. It's almost at 18,000 points new record on DAX 40. So regardless the last few hours, market is a bull, and it's a bull because the interest rate cuts are given as a fact, and especially today considering the employment rate in the United States rising. Okay, what else? Euro dollar rising too because dollar is getting weaker. Remember, this was a chart from last week. I was expecting actually the opposite movement. I have to be honest with you and realistic. If you follow this channel, if you follow these reports, we were talking about probably this was the most likely scenario if the unemployment rate, the labor market report was strong again. It wasn't the case. The NFP was so good, but again, unemployment rate was just rising back again. Few details. If you follow again our profile on X, I'm just posting few details here, and one of the details I found interesting. It was, I didn't post here. No, I think I didn't, but let me show you on my personal profile, because you're gonna probably shocked by this. If you take a look on the unemployment rate in long term, take a look in this chart. We have been seeing unemployment rate close to or below 4% in very few occasions for the last more than 20 years. In 2000, it was below 4%, like right now. What happens next year? The crash of .com corporate companies in 2001. 2007, it wasn't below 4%, but it was close. It was almost at 4%. What happens next year? The crash of financial industry, financial sector. By 2020, all of you know what happened. And again, the labor market just before that moment, it was below 4%. And right now, again, we are below 4% in 2024. So my question is, what is coming next? Because obviously, from now, we are on the bottom. The unemployment rate only can rise. And it means like it can rise softly and calmly, or it can rise like it happens in the last few times. A massive spike on the unemployment rate, which means obviously a crash and a recession. Hopefully, fingers crossed, that will never happen, but we got many geopolitical factors right now that could suggest a kind of global conflict, Middle East, Ukraine, Taiwan, whatever you want. But we are witnessing right now convulsive times, and all of these events could happen. Now, we mentioned gold. Gold is making a new record. Take a look. Amazing. If we see on long term, you will also see that it's actually getting so away from the ceilings, from the tops. So this definitely means something. This definitely means something, and it's almost closing already on Friday, the market, and the gold is resisting super well, super strong those levels. Oil has been moving, but just little bit, and again it was dropping mainly, so no a big difference, and again it's just slightly changed here. We need to follow also the OPEC comments in terms of production, if they're gonna cut it, not, etc. I uploaded a video recently, I think it's also in our profile here on X. I uploaded a video with a few comments on oil market. So let me see if I can actually share with you, but I think it's on our profile here. Yeah, it's this one. Once again, with Albert Forex Market, we discussed the Fed's view, the next move in the dollar, and the future of pound and crude oil market. We mainly give the 2 or 3 scenarios for oil in that video. If you want to take a look, it's posted on X. Okay. And the last asset interesting this week has been Bitcoin, which has been rising, also a new record of $17,000 right now at $17,894. But the highest level registered here, it was $70,884. Amazing, this is crazy. Again, if you want to go in specific comments and quotes from Christine Lagarde, from Jerome Powell, you got the quotes here from Jerome Powell. I have been just highlighting the ones that I thought was more relevant. It will be appropriate to start reducing the level of restriction when we do get that confidence, and we are not from it. No, we are not far from it. That was the words from Jerome Powell yesterday, which in theory was super positive for the market, super negative for the dollar, because obviously it was so dovish comment saying, no, we're ready, we're gonna cut interest rate, we just need the data to be sure that we're gonna do it. Yeah, you got also the rest of the comments here. Christine Lagarde, we did not discuss cuts for the meeting, but we are just beginning to discuss the dialing back of our restrictive stance. Christine Lagarde, President of Central Bank of Europe. And I give you the most relevant data related with that, and also my vision about what is going on. We are more confident as a result, but we are not sufficient confident. That's another comment Christine Lagarde did. So that's why I think I give you this, like, remember the inflation rate in since November in the case of Europe didn't change. I also give you specific details about that. My point, I mentioned Japan, I mentioned the gold, I mentioned the ETFs. Also steel is very interesting because if gold is rising, we suspect it's because of China baking up the currency, and even retail market in China is rising. The exportations from Switzerland to China are rising too. Otherwise, ETFs on gold are actually dropping in terms of liquidity, withdrawals, and so on. Very interesting point, okay? That's all from my side. I hope you enjoyed this week. And yeah, I hope this recap is useful in terms of keep a good view on what is going on the whole forex on the market. Remember, if you want to request any particular matter, you want to participate in any podcast or video with me discussing any topic, or you actually want to request any particular monographic or report on certain asset, please contact me through the email. If you like this content, just please thumb up and subscribe if you really appreciate this material, please. And yeah, good luck and see you in the next reports. Bye bye.